So now we talk about what are the fees and charges for mutual funds. Nothing is for free, and mutual funds do charge some fees for clients. We'll talk about these in the next slides. First, there's the MER, or the management expense ratio. This includes the management fee, administration expenses, and trading expense ratio. Trading expense ratio is applied when there are stocks or equity in the mutual fund. So that is a fee also, which is added to the MER, which is a part of the MER. And we will talk in more detail about the management fee in the next slides. Sales charges are when you buy or sell mutual funds, there may be a charge. Front end is the client pays a fee when they buy, and back end or deferred sales charge is the clients pay a fee when they sell the mutual fund. And no load is usually bank funds, mutual funds are no load, meaning you do not pay any fee when you buy or sell the funds. Then there are trailer fees, switching fees, redemption fees, and transfer fees, which we'll talk about in the next slides. The management expense ratio, the formula for that is aggregate fees and expenses payable during the year. Whatever the fees and expenses that the company has to incur for the mutual fund, they take all those expenses and fees and they divide it by the NAV, net asset value, for the year. And this way we get an annual MER. So the MER is a percentage and it is calculated on an annual basis. So the MER fees varies in different funds. If it is a money market, it is usually very low. It is 0.5 to 1%, but the returns of money markets are also very low. So this does affect the return. The equity funds, it may be 2 to 3%, and index funds, it may be 1 to 2%. So index funds, MERs are usually lower than equity funds because index funds will just follow a index or a benchmark, and the portfolio manager doesn't have to do much rebalancing or portfolio management. So the MERs are minused from the return, regardless whether it makes a profit or a loss. The MER will be minus from the return of the fund. The charges which are not included in the MER are interest charges, taxes, audit legal fees, safekeeping custodial fees, and provision of information to share or unit holders. Those are the 4 items which are not included in the MER. And another note is that F-class, if you sell an F-class fund to a client, the fees will be lower, the MER will be lower because they have a fee-based account, and only fee-based accounts can buy F-class funds. So now we talk about the front-end fee and the back-end fee. So we're talking about the sales charges now, the second one. So here we already discussed about the MER, and now we're talking about sales charges. The front-end fee is a fee which you pay when you buy the fund. So to calculate this fee, you will need to calculate it based on the load charge. You must first determine what is the NAVPS, and then you make an adjustment. So let's take a look at an example. The NAVPS, or the price of one unit, is $12, and the front-end load is 4%. So we need to calculate NAVPS divided by 100% minus the sales charge. The sales charge we said is 4%. So 4% is 0.04. And when you take 100% and you minus 4%, you will be left with 96%. So 0.96 is 96%. So we need to take $12 and divide it by 0.96. And that will give us $12.50. So this means that if you buy a fund with an NAVPS of $12 and a 4% front-end load, the units actually will cost you $12.50. So there will be an extra amount that you have to pay. So this 4% of the offering price is actually equal to 4.17%. How do we calculate that? We can say that we're paying 50 cents extra. If we're paying 50 cents extra and you divide that by 12 times 100, you will get 4.17%. So the actual sales charge is 4.17% if the front end load is 4%. So you have to see in the question, are they asking you what is the offering price? Then the offering price is 12.5. If they ask you what is the sales charge, then the sales charge as a percentage of the offering price is going to be 4.17%. In the case of the backend fee, it is applied when you sell the units or the funds. So to calculate that, you must again determine what is the NAVPS. What was the original? When you bought it, it was supposed $10. And now you're selling it and the NAVPS is $12. It was previously $10 and now it's $12. And let's suppose the backend fee is 3%. So there's two ways of doing it. Either some companies will base it off of the original price. The original purchase price was $10. So what is 3% of $10? It's 30 cents. So 12 minus 30 cents, the client will get the fund units based on $11.70. If they base it off of the selling price is $12. So 3% of $12 is 36 cents. So if you minus 36 cents from $12, you'll be left with $11.64. So it depends on the company whether they base it off of the original investment price or base it off of the selling price. So you need to be clear about that.